What if I told you that even though Americans are earning more than before, many middle-class families are actually getting poorer? The reason is not just inflation, it's rising interest rates. Today, we'll break down how higher interest rates in the USA are silently hurting middle-class families and what it really means for daily life. 1. What are interest rates and why are they rising? Interest rates are basically the cost of borrowing money. When interest rates go up, loans become more expensive. In the United States, the Federal Reserve raised interest rates to fight inflation. The goal was simple: make borrowing expensive, reduce spending, slow down rising prices. But while inflation slowed a bit, middle-class families paid the biggest price. 2. Higher interest rates equals expensive loans. Let's start with the most direct impact. Credit cards, car loans, home loans, and personal loans have all become more expensive. For example, a credit card that once charged 15% interest may now charge 25 to 30%. Monthly car payments are higher. Mortgage payments have jumped dramatically. A family that was comfortably paying bills earlier is now struggling just to stay afloat. 3. Credit card debt is exploding. Middle-class families often use credit cards to manage daily expenses like groceries, gas, medical bills, school expenses. But with higher interest rates, minimum payments increase, yet the balance barely goes down. Many families are stuck in a debt trap where they keep paying interest but never escape the loan. This creates stress, anxiety, and financial insecurity. 4. Housing has become unaffordable. One of the biggest dreams of the American middle class is owning a home. But today, mortgage rates are at multi-year highs. Monthly payments are hundreds of dollars higher than before. Many families are forced to keep renting. Even people who already own homes are suffering because adjustable rate mortgages reset at higher rates. Home equity loans are more expensive. The result? The middle class is locked out of affordable housing. 5. Savings are not enough to cover rising costs. Yes, banks are offering slightly higher interest on savings accounts, but here's the problem. Inflation plus higher loan costs greater than savings interest. Healthcare, insurance, education, and utilities continue to rise. So even if a family saves money, it doesn't grow fast enough to protect them. Middle-class families are saving less, or not saving at all. 6. Layoffs and job insecurity. Our increasing high interest rates also hurt businesses. When borrowing becomes expensive, companies slow down expansion. Hiring freezes happen. Layoffs increase. Middle-class workers are often the first to feel this pressure. Even people with stable jobs now live with the fear of job loss, reduced bonuses, slower salary growth. Financial planning becomes almost impossible. 7. The psychological impact on families. This financial pressure doesn't just affect bank accounts. It affects mental health, family relationships, long-term confidence. Parents worry about education costs. Couples delay having children. Families postpone vacations, investments, and retirement planning. The middle class is surviving, not thriving. 8. What can middle-class families do? While interest rates are out of our control, financial awareness is not. Some smart steps include: avoid unnecessary debt. Pay high-interest credit cards. First, build an emergency fund. Focus on budgeting, not lifestyle inflation. Small decisions today can prevent big problems tomorrow. Conclusion: rising interest rates were meant to control inflation, but they have quietly become a burden on the American middle class. Higher debt, expensive housing, job uncertainty, and financial stress are redefining what it means to live a comfortable life in the USA. The real question is not just when rates will fall, but how prepared families are until that happens. Call to action. If you found this video helpful, like and subscribe for simple finance explained in plain English. Let me know in the comments, how have rising interest rates affected you or your family?